head of consumer and retail research at Melius Research, and she covers this stock. Karen, what is your take on what Walmart has told the markets about the first quarter?
Well, I think as you commented, we thought expectations were high going into the quarter. We'd met with many investors who were trying to justify the current valuation, doing some of the parts and various other metrics to justify upside to the stock. I mean, I think this is more of a grind higher story, but Walmart is a very conservative company when it comes to guidance. They've always said and consistently said that they will grow sales at a greater rate, operating profit at a greater rate than sales. But they've also been clear that that's not every quarter. It will be true for the year, but there's going to be lumpiness for the quarter. So fourth quarter results were kind of just in line with consensus. First quarter guidance was decently below, and full year guidance was decently below, but expectations have just been very high. And my guess is that when we're talking a year from now, that they will have handily beat their guidance for the year, but that's not how they guide. And so the stock reflects that. Maybe there's a little digestion phase for a month or two, given how strong the stock has been for a year and even year to date. But fundamentally, they have a flywheel and they're pushing forward with their flywheel. And it's not one thing. It's there's various components to everything that's contributing to their operating profit strength, and will continue to. It just may not be linear.
Okay, you mentioned investors trying to justify the valuation on Walmart. That price earnings multiple right now, that's the multiple on expected earnings, 35.5 times. So that's well ahead. That's well more than the average S&P 500 multiple, which is also at historic high levels. You obviously think that premium valuation is warranted. You have a buy rating on the shares and a target price of $110. It's about $13 higher than the current share price. So what kind of metrics do you use to get to that price target, and why the buy rating?
Well, so I look at calendar 26. I mean, now that we're basically in March, I'm not sure 25 matters. So I look at calendar 26 earnings, and I am much more a proponent of EV to EBITDA. And when you look at Walmart on an EV to EBITDA basis, it's certainly not cheap, but it's a slight premium S&P, but nowhere near what the PE on 2025 would indicate. And I think that I have to limit my comments to my coverage. But when you look at my coverage, there's very few winners that will emerge in my coverage as it relates to retail. And keep in mind, from a insulation perspective, 60% of the U.S. box is not really subject to tariffs. And they've been very capable of navigating through tough tariff environments in the past. And they're gaining share across the board. They're gaining share with high income. They're gaining share with low income. They're doing dollar stores damage, meaningful damage. And they're gaining share with their the e-com, because e-com's got its own whole ecosystem as it relates to Walmart Plus, Walmart Fulfillment Services, Walmart Connect. So they just have a lot of, their flywheel just keeps churning. This year may be lumpy, but I don't know that that's even the case. I think it's conservative.
How important are their grocery operations?
Very important. And I mean, when you think about grocery, the reason that that's so important is that you have a frequency play. And so if you're gaining share with all cohorts income-wise in terms of grocery, that's a frequency shop. So you're getting a weekly shop from all cohorts demographically, and then that translates into general merchandise sales, because you tend to move into the rest of the store if you're going to the store, if you're going to Walmart for groceries. And not many retailers that well, there aren't really any retailers that have the strength that Walmart has with respect to the grocery shop that has frequency.